So we'll start with the sales ledger control account. Now, if you can see from the name, let me admit the others. So if you can see from the name, okay, sales ledger control account. So that means it will control the sales ledger. Now, what is inside the sales ledger, okay? Inside the sales ledger, we only have the trade receivable account, okay? Sales ledger, we only have the trade receivables account. Now, can you still remember what's the trade receivables? Okay, I'll just explain, okay? So you just listen. Now, a sales ledger control account is exactly the same format just like the trade receivables account, but it will be in total, okay? Now, let's try to recall, okay? When will the trade receivables account be involved, okay? The trade receivables account will be involved, okay, when the trade receivables account will be involved when you sell goods on credit, okay? Only when you sell goods on credit, then we will have the trade receivables account. So goods on credit, you will debit trade receivables because he received it, and credit sales because sales out, okay? Trade receivable in, you sell good to Ali, for example, the trade receivables, Ali in and sales out, okay? Please make sure that for the sales ledger control account, take note, you can never, okay? You cannot include the cash sales in the control account, okay? Because why? Because when it's a cash sales, the transaction will be debit cash because money in and credit sales. So as you can see over here, there is no trade receivables account involved, okay? So to recap again, sales ledger control account is only about credit sales transaction, okay? So no trade receivable, so it's only about credit sales, okay? Next. Okay, I'll show the next one. So now, what are the transactions normally involved for a trade receivables, okay? Why you need to know this? Because later on, because this is important, because the trade receivables is exactly the same format as the sales ledger control account, okay? So you need to be familiarized with what will be the account involved in the trade receivables, okay? So now, the trade receivables account is when you sell goods on credit, okay? On credit, then the then the trade receivable will be involved, okay? Because he is the customer who buy on credit. Sell good on credit to trade receivable, so you debit trade receivable in and credit sales, okay? So this is the trade receivables account. This one, I'm going to write it in the trade receivables account, okay? So you see, debit trade receivables and credit sales, okay? So trade receivable in with the sales and sales going out to the trade receivables. That's why I put this one in the big, I put it big so you can see that, okay? For this, it's exactly like a sales ledger control account, okay? And that's why this is actually just like the double entry, okay, of the trade receivables account. So you can see you sell goods on credit, okay? So debit sales, okay? Debit trade receivable in, okay? And credit sales, okay? sales going out to trade receivable coming in. And then after that, the trade receivable return the goods because it's damaged. Okay, you see the arrow going into you, so it's called return inwards. Okay, return inward. Another name is called the sales return. Okay, so return inward. If you remember the double entry is debit. Debit return inward. You see here, debit return inward with trade receivable. Okay, for example, Ali return. So this is Ali. Okay, and here you will write return inward. Okay, debit out return inward, credit trade receivable, the second transactions over here. Okay, so debit return inward, credit here, return trade receivable with the return inwards here. Okay, number 3. Okay, after that the trade receivables they pay you. Okay, so you see you pay. Okay, trade receivable pay. So debit credit trade receivable and debit bank they pay you, so your money come in, and trade receivable pay trade receivable out. Okay, so you see trade receivable go out the bank, trade receivable pay, so money go out, and here money go in. Okay, money coming out from the trade receivable to you. Okay, in and trade receivable out. Okay, when he pay, trade receivable pay, money out, and this is your bank, money in. Okay, and after that sometimes when he pay, okay, when he pay you might give him the discount, which is called discount allowed when you sell goods on credit. Okay, you sell goods to him, and then sometimes you give him the discount to encourage him to pay early. Okay, prompt payment. So for example, he owe you 200, so now he pay you 150, and the 50 is the discount allowed. Okay, so that's why the bank and the discount allowed will be on the same side. Okay, another way you can remember is that discount allowed is an expenses. Okay, it's always on the debit side. So here, so we could have, if I did not write this here, but if we want, we can have another discount allowed. Okay, here. Okay, so discount allowed, you will write discount allowed is an expense, discount allowed here, and then here will be discount allowed. Okay, you see debit, and here you see credit. Okay, so far okay. Okay, after that, this one you have not learned before, but bad debts is also an expense. So bad debts, again, it will be the same. Okay, I'll write over here. Bad debts also expenses. So bad debts will be here, debit, and over here, bad debt will be on the credit side. Okay, and now because you see over here bank, okay, after the trade receivables they pay, okay, money out, okay, they pay already, and then the bank the check is dishonored by the bank, so money coming in again. Okay, so dishonored check will be on the opposite side. Okay, so now let's go through the test paper now. Oh, before that, do you want me to explain the purchase ledger control account or no need? Yes, also. Okay. Okay, then I'll just explain the purchase ledger control account first, then we'll go through the test paper. So purchase, if you have any question, you will just ask me. Okay. So purchase ledger, so you just need to remember the sales ledger control is the same as the trade receivables account. Okay, then you will be able to do it. Okay, so this is the purchase ledger control account. Just now, sales ledger is when you sell on credit. Purchase ledger control account. Purchase ledger control account is when you buy on credit. Okay, so what will be involved in the purchase ledger control account is only the trade payables. Trade payables, another name is called the creditor or the credit supplier. The supplier whom you buy the goods on credit from, okay? So inside the purchase ledger, we have the trade receivables, okay? That's why the purchase ledger control account is exactly the same as the trade payables account, but it will be in total, okay? It will be in total, okay? So the purchase ledger control account will be about the credit purchase transaction only, okay? So take note here again, it cannot include cash purchase, okay? So I repeat again, purchase ledger control account is about credit purchase, okay? So that's why the purchase ledger control account is exactly the same as the trade payables account format, but it's in total, okay? So let's take a look, okay? Because as you can see, for example, you buy goods on credit. So purchase, debit purchase coming in, credit the seller going out, okay? Going out the goods to you. This one your goods coming in purchase, credit trade payables, the goods going out, okay? From the supplier give out, your purchase coming in. Now, if it's a cash purchase, then you will have, when you buy goods, your goods coming in, your money go out, okay? So you can see here, there's no trade payables involved, okay? So you see here, you buy, debit purchase, and you buy from supplier going out, or you buy by cash go out, okay? So now, okay, so um, this is the credit purchase. So what transaction involved for trade payables? Credit purchase, okay? When you buy from the trade payables. So this is you, okay? This is you, okay? You buy goods from the trade payables, okay? From the supplier. Trade payables is a supplier whom you buy on credit, okay? So you buy goods on credit is purchase, you buy, debit purchase, credit trade payables, okay? Because purchase coming in, the supplier go out, okay? Go out the goods. So you see trade payables, you see your purchase in, okay? And then here you will write trade payables, okay? This is the double entry. That's why your double entry must be very strong, okay, for you to do all this topic and including the next topic to come, okay? All the upcoming topic. So purchase coming in and credit trade payable with purchase, okay? So you see here, okay? Okay, that's why you see purchase is always here, okay? It cannot be on the other side. That's why you must think of this, okay, as the double entry, then it will be easier, okay? So you buy goods from the trade payables, debit purchase, okay? Credit trade payables, okay? So you see trade payables out, purchase, okay? Here purchase in. And now you return the goods to the trade payables. Okay, return outwards, you see the arrow going out to you. So return outward here, you see return out on the credit side. So trade payables you will have return out here, okay, you see here, okay. And after that, okay, you pair. Remember just now the sales, credit sales is you receive the money, right, because you sell to him. But over here you buy, okay, so you pair. Over here you buy, that's why you pay, okay? So you see here you pay out, okay, to the trade payable. So your money go out, trade payables have money coming in, okay? And then sometimes the trade payables, okay, the credit supplier, they will give you the discount. This discount is called the discount received, okay? You buy from him, he give you the discount. So discount received. If you go back to your previous notes, okay, discount received, okay, is is an income, okay? So income always have a credit balance, okay, or plus on the credit side. So discount received here, and then here you will have discount received, okay? Credit, debit, okay? And after that, if there's any charges by the trade payables, okay, because trade payables is like this, okay, plus and minus, okay, trade payables, if there's any charges, it will increase the amount you owe to the trade payables, okay, any charges will be here, okay, and this is the contra, okay. Contra, you might is when a person is both the seller and he's both the customer also. So in order to offset the two account, you will transfer from the smaller amount to the bigger amount, okay. It will always be on this side, okay, minus off, you see, your creditor minus off, okay, contra going on this side, okay. So now we'll go through the test paper. So far, is there any question? Test paper. That's why you must think of it, okay, as the double entry. You must think in terms of the double entry. So sales ledger is trade receivable account by importer, and purchase ledger is the trade payable account. Test paper. Okay, here. So now let's go through this together. Okay, so control account. So now first of all, you when you have the question like this, you have to identify first, is it the transaction is going to go through this is the sales, okay, sales. This is the sales ledger control account. This is the purchase ledger control account, okay. The trade payables, this is when you sell on credit, when you purchase on credit. So now when you receive question, first of all, you have to write down, is it sales or purchase, okay. So first of all, you see trade receivable subsidiary, okay. So this is sales, okay. Trade receivables is sales, credit sales. So you write S over here. Trade payables, you write P, okay, because it's purchase, okay. So this one, now you see here, cash purchase and cash sales, we are not going to include it, okay, because the sales ledger, the purchase ledger is only about the trade payable and trade receivable. That's why it's only the credit sales and credit purchase. So cash, no, we are not going to include it. So check received from customer, you see customer, so it's S, okay, I can't write this, okay, S, okay. Check pay, supplier, you see P, you write P. Issue invoice, okay. When you issue the invoice, meaning you sell to customer, so you issue the invoice, okay. You sell to customer on credit, then you issue the invoice. So S over here, sales. Invoice received, meaning when you buy, so purchase. Okay, sales return, okay, sales, okay, in the sale. Purchase, okay, purchase. Discount allowed, you give the discount, so sales. It's about selling it, okay, then you give the discount. Discount received when you buy, purchase. Irrecoverable bad debts is in the sales, okay. And this one offset is in the contra, meaning you have to write once in the sales and you write once in the purchase, okay. Later on, I'll give you this also, all the answers, so you can, if you like, you can practice by yourself and then check with the answers, okay, to get ready for the retest on Wednesday. So after you are done with all these, okay, then we can proceed with answering the questions. So first of all, this one, trade receivables is a debtor account, okay, asset. So plus over here, minus. This one, trade payables is a credit, so you have plus on the credit side, minus on the debit side, okay. So first of all, let me erase this one. Okay, so now let's take a look. Okay, so this one sales. Okay, so we are going to write over here as, okay, so balance BD, this is the opening balance, so you write balance BD, you see, 28200. This one trade payables balance on the credit side, you see here, you write balance BD on the first day, June 1, 16280, okay, on the credit side. These two not going to include. And now check received from customer, okay? So you think of the double entry. Check received from customer. So debit bank, bank in, credit customer. Customer, you see, customer pay out the bank 16020, because the other double entry will be bank here, okay, bank here, okay, and here will be here on the credit side, okay. So you, in order to do this, you have to think it in terms of double entry, okay. Now next, check pair to supplier. So supplier in and then bank out. So supplier in the money, okay, you pay to supplier, supplier in, you see, bank. Now next, issue issue invoice, meaning is credit sales, okay. Sales, again, you see sales account, sales out, and then the customer in, okay. And then invoice receive, okay, is a credit purchase or purchase in, and this one give out, the supplier give out the purchase to you, okay, you see here. And now sales return is a return inward. You sell to him, he return to you, is return inward. So you just think of this as a double entry. Return inward is debit, so here it will be credit. Where is the return inward? Here, return inward. Sales return is the return inwards, okay. And after that, this one, purchase return is return outward. You buy and you return, okay. Return outward is on the credit side. So here it's on the debit side. Think of it as in the double entry. Discount allowed will be the same column as the bank, okay. So when you pay here, you see you pay here 16020, and they give you the discount allowed, okay. Another way to think is you think of discount allowed as expenses, okay. Discount allowed debit, and here discount allowed account, if we have a discount allowed here, it will be here, and then over here trade receivable you will have on the credit side. You write discount allowed on the credit side. Here you will have trade receivable, the double entry. Discount received. Now discount received, okay. So discount received is a revenue. So we will have discount received. We write trade revenue here. Discount received here. So here trade payables, okay. We will have discount received here, okay. That's why all of this is the double entry, okay. And next, bad debts, okay. Again, bad debts is the expenses. Bad debt debit, here you will have bad debts on the credit side, because bad debts minus off, okay. You write off from the debtors. This one we will learn next time, okay. And lastly, after you write all this, okay, you write the contra account. Contra is when you contra the sales and the ledger, so have the S and the P, okay. You are going to write on both sides, okay. So contra is always here, okay. So your contra, this is the debtor account, you money go out minus the amount, okay. So contra here 400, and here contra go to trade payable, you have contra coming in, okay, 400, okay. You see here, and here, okay, contra, okay, because it will minus off, because contra is to offset. So you see, if you contra, you see minus here and then minus here, okay. So after you are done with all these, then you will do the balancing, okay, find out the balance. Okay, I'm not going to go through again how to do the balance, okay, you should know right now. But basically after you are done with all this, after you are done after you are done with all this, okay, you have to add up, okay, so add up this one, you add up this one how much, add up this side how much, okay, and then the bigger side, for example this one add up is 276,200, you write on both sides, okay, you write on both sides, okay, so okay, this one 7, you add up here is 7,006, and then this one is 13,000, okay, just erase everything. Okay, so you add up this one, add up this side is 76,200, here 18,200, so you write the bigger amount here, you draw the box and write the bigger amount. So this amount, the sum, after that you minus off with this one, so the balance is, so this is the balance, so this is the balance, okay, balance CD and balance BD on the other side, okay. So same again, when you do the balance, that's how you do it, okay? You find out the total. This one you add up how much. This one you add up how much, okay? And then you find which one is the bigger. This is the bigger. You write on the total, okay? After that, you use this bigger. You minus off the amount so that this is the balance.